Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 24th of June, 2024, about 6:15 p.m. Central Time. So in the stock market, in early evening trade, we're getting a bounce. I've gotten signals in the Russell that the market should be running into resistance, but there's been a switch that's gone on. And the switch has been that the Dow has gotten the bid and the Russell at the expense of the NASDAQ and the S&P. You'll see that when we go to the charts. It's pretty crystal clear. I pointed it out to my subscribers in my morning video that I was seeing that happen the other day. Part of it has to do with NVIDIA. It's got a cold. It's down about 14% or so from its high. And it's the first reaction we're getting. You know, traders are already coming out and all over TV. Is this Cisco where the market went up so dramatically and then came down? It could be. Cisco had a number of corrections along its bull run, if you remember that stock in the 90s and so on, and you would get 20-30% corrections and then it'd roar again. So everything's relative. This is a new play. Any stocks that's gone up this dramatic, anything can happen. Take nothing off the board when you deal with these, but also understand it's got a uniqueness. You really can't do really sophisticated AI without their chip, and that puts them at the leadership of all this. Okay. When we look at the gold market, keeps coming back here into the 2350 area, running into resistance. Silver getting a minor bounce. The copper market still not ready to do anything. And notice I've moved to the September and the October platinum right here, just so you keep up with that. The dollar down 30 points. Most of the currencies were up, and they're correcting a little bit tonight. Then when we come to the bonds and notes, they were down a fraction today, and now they're coming up. The markets are marking time. What are they doing? They're waiting for data. The big data is at the end of the week when we get the PCE, indices, we get the expense, income. It's going to be an interesting end of the month. But tomorrow you're going to get the Chicago Federal Reserve, the National Activity Index, the May Index. Redbook Group will come out with their weekly U.S. retail sales. They've been running 5.5%, 6.25%, right in that point. Case-Shiller, 20 metro home prices for April. Now remember, these are always pretty well delayed. They come out at 8 o'clock. Richmond Fed, monthly manufacturing sector index. That'll hit you at 9. We had today the Dallas Fed manufacturing index. And again, it's still negative, but it was a big improvement from the minus 19.4 it had. The Conference Board, U.S. consumer confidence, well, that'll come out at 9. At the end of the day, you're going to get the API numbers. And I know that the EIA, they're looking for a draw already of about 3 million barrels in the crude oil market. So, interesting times. Let's go to the chart. And one thing that's evident, if everything ended right now, you're up for the week, 0.84%, and this would be a new all-time high close if it ended right here. The markets had a stepping ladder down, and notice you have an outside data to the downside. Now that's important because you haven't had those on the whole rally that you've recently had here. You had one that started there, and now you're getting another one back to back. Is this the end of the rally and the market consolidates it? That's what you always ask yourself when you see these. The pattern is one of lower highs, lower lows. If the market drops down, the potential's to get back to the 18-day average of closes. Given that it's an outside day down, you get what's called a bear trap if today's highs, and I'll come back to that just so we can see it. If today's high of 55, 58, 50 is taken out, that could capture the people thinking the bearishness is hitting here. That's always something I look at. The Bollinger Bands, you were running the Bollinger Band and you slipped to the right. So correction time. This is not a sell signal. You're in a correction, and it's not a sell because you're over the 18-day average of closes. But you did lose the bullish momentum. So let's talk about this signal. And let's get away from Tuesday and come right here. You had a 79.66 reading. Any close under 79 says that you've lost the bullish momentum, and prices often then retreat back to a challenge of at least the closest main moving average. In this case, it's the 18-day, and you can see where you're at. So it's a very important day. When's the only time it can, first of all, re-embed? You didn't lose it yet. So even though you're down like this, that's intraday. You haven't lost the reading yet. Tomorrow's when you can lose it. Pay attention to that. When we look at the NASDAQ, here too, take a look at the readings. So let's go back one day. You lost the reading on Friday. So you didn't get it back today. When you lose the reading, the odds favor, and by the way, you had an outside day down, which was another warning sign if you take my enhanced, it's called my outside day course. That was the end of this run if you had follow-through, which you've had. This does not mean it's necessarily the high, but you've broken the pattern here of this run, and often prices try to get back to the 18-day average of closes to regroup. When I look at the Dow, it's the opposite. I was telling you last week that I see a rotation, and the rotation was I'm suddenly seeing that the Russell and the Dow want to come up, and the S&P and the NASDAQ want to go down, and that's just what's happening. And notice you're up here, you had an outside day to the upside, so until you take out this week's low, if you did it tomorrow or the day after, that would be a bull trap. Barring that, now you're caught between the 100-day average and that Bollinger Band in an overbought market. And in the Russell, this is where I was looking for resistance to come into the marketplace, and I got what I thought. The market is correcting, present tense, correcting an oversold condition. You still have to have this number over a 30, and you're not there yet. On the way up, resistance, next one will be the 100-day average in this market. The trend is up, the bias is down, and we know what's going on. There's a shifting within the markets taking place. In the 10-year note, you're overbought. The market is watching the 18-day average converge with the 100. If it gets over that, that's a bullish signal. It's called a bullish crossover. And often when that happens, the market will try to go up and make a new high on the move. Doesn't mean it always works, but that's how moving averages typically play. You're not quite there in the 5-year. It's nowhere near as close as you are in the 10-year. Then when we look at the dollar index, to say that I'm not surprised, that's an understatement. You went back to the Bollinger Band. You're not embedded. You have to have another day or so to prove that you can embed. You've got two days in a row where you've got the numbers over 80, and you went to the band. That's where I think the pros step out of the market. If you've taken the enhanced Bollinger Band course, it's just what I teach. In the eurocurrency market, first thing I see is an oversold market in a downtrend. I don't think people are deploying new money in an oversold condition. But the trend is down and the bias is down. In the British pound, trend down, bias down, but same thing, oversold. Where did the market stop? The first challenge of the 100-day average along with the Bollinger Band, just what you hear me talk to you all about. You had your bounce from it, made a challenge of the 18-day average, right back down, and the market bouncing. So the trend is down, but you're oversold. I'm not convinced traders are going to deploy new money on the short side in an oversold area. In June micro Bitcoin, all right, you can still stay with the June. I moved on one of my services to SEP, but I'm thinking June is probably still the place to be. You can see, you got under the Bollinger Band, but you're embedded. So on good hard rallies, the trade probably wants to sell it. Now, this is a market that was just at 74,000, and now it's at 59,000. This is not for the faint of heart. I mean, when it moves, it is a son of a gun. And this move all came about, if I can get this back up, I want to show you how important this is. Out of sideways action right through here. Right here. You narrowed in. Now, when you're narrow like that, I like to see more days of it and oversold. You either are going to come through the top or the bottom in due course. What this market did is it started pushing on the low. The first stopping spot should be, if it continues down, the 100-day average. I think you'd agree. It's exactly what it did. This was Friday. This is today, as the market's now letting go of that. Now that becomes resistance on the way up. And if you embed, are you going to go back to the 51,000 mark? That's a possibility. In Brent versus WTI crude, well, the spreads are not able to stay up and over this 18-day average. They got as high as 460. They're back to 430. They're just saying whatever one's going to do, the other's going to do. There's still attacks going on in the Red Sea. Netanyahu today said no. He has never agreed. He disagrees. He never told President Biden that he would abide by a permanent ceasefire. He said a truce for a short period, but the goal of Israel never changed, to destroy Hamas's fighting capability. There's no way you can destroy Hamas. It's an idea. Ideas can't be destroyed with war. But what you can do is destroy the fighters of it, and that's what he's been doing. But now the situation's getting even worse because Israel's going to take soldiers out of Rafah. It said as its mission there is coming to an end and move them to the north on the border with Lebanon. So are they going to go into a war with Hezbollah? And then does that involve Iran again? Because Hamas is weak compared to Hezbollah, and Hezbollah has a heck of a lot of missiles capable of really doing destruction within Israel. I'm praying it doesn't come to that. And as I said, you're never going to wipe out Hamas. This has to end at some point. Higher lows, higher highs. You can see what's going on through there, trying to embed. Same thing here with the embedding going on. Embedding means I'm even more bullish as it's going higher. So until that red line closes under 79, breaks in the market are where I think the pros will step in. But when you make the higher high first, there's a rule I have on the enhanced Bollinger Band course that I don't want to share, but my people that have taken it know the rule. Gasoline, notice where you're fighting at the 100-day average. Now, we do know that going into the debate, I seriously doubt that the president's going to let gasoline run away because he's trying to hold down costs. He's in, as I understand it, a bunker and a hangar at Camp David with a person that they have hired that acts like Donald Trump and throws out the questions and the mannerisms of Trump so that Biden can get it together. Trump is not preparing in any manner, which probably isn't the smartest thing you can do. They're prepping Joe. I think Donald is too confident here. And we'll see what happens. I know you're all going to have your own opinions. I'm certain we're all going to watch it and we're all going to see different things there. It should be fun. That's the way I look at it. Unfortunately, these are the two guys running for president. I was hoping it would be young people, much younger. You know, I'm against people in their 70s being in office. And I'm over 70, and I don't think it's right. It's a young man's game, and it should be given to them. Lower highs, lower lows. And by the way, I believe in term limits, too. So you can write me and tell me how wrong I am. I don't believe in professional politicians. I don't think they get the job done. I think rotation, I don't care if it's 2 terms, 3 terms, however you want to define it, but professional politicians, forget about it. You ever see a politician that's a pro walk out of office poor? It's rare. Can happen, but it's rare. We just had one guy, Burke, they're putting him away at 80 years old. So when you look at all this, what do you do with it? All right, well, you take a look, and what we have is our trading kit. And this helps you in many ways. Number one, we offer things that even for the pro, it refreshes you. For the newcomers to the market, it's 10 chapters loaded with information. It's meant for the beginner and for the person that wants to brush up on things. 14 of the most popular chart patterns, pictures of them, how they work, all in there. You print them out, you put them on your desk. My pivot point course. In addition, our Rune indicator course, which is time and price together. Then my cause and effect sheet. I created this years ago because I wanted to know what M1, M2, and M3 meant and how they worked and what they meant for the economy. It's as important when I created it then as it is today. How do you get all this? And there's a lot more. All the CME courses are in here. Our charting software is in here. plenty for you to do. IraEpstein.com, under free offers on the top left, or move your cursor to the top there and give it a click. I'm Ira. I'll catch up with you tomorrow.